Brace the rudders! Raise the sails! Raise the sails!
Captain, an unidentified ship is approaching. Over.
Roger. Wait, is that an enterprise sales solution?
Reach sales professionals, not professional sailors. With LinkedIn ads, you can target the right people by industry, job title, and more. We'll even give you a $100 credit on your next campaign. Get started today at linkedin.com/results. Terms and conditions apply.
Reality radio for a really great future. We're talking real money.
Got a phone? We got a number for you to call. That number is 855-935-TALK, 855-935-8255. What are we going to talk about if you call that number? Money. Money. All kinds of money stuff. I'm Don McDonald, suffering from the first case of jet lag from New York to Florida.
Trust me, this is only a 2-hour show, so you can't actually go into all the twists and turns. I'm sorry of it.
I really should have learned my lesson sometime over the past 30-plus years that I've been married to Debbie, because I know that about half, if I fly by myself, never a problem. If I fly with Debbie, it's not just a problem. It's a cascading series of unfortunate events. I mean, at some point, Debbie said, this is like a John Candy movie.
Yeah, actually, it's closer to the Titanic when you think about it.
No,
really
we didn't have any
close.
Titanic issues.
You're going like,
although we did on our
4 miles
leg,
down.
When we're getting into we left for Orlando at 1 p.m. Eastern time and got here at 1:30 a.m. Eastern time.
It's a long time.
And at one point in our final leg of the flight, the flight attendant goes, "Are there any medical personnel on board the plane? We need a doctor
not a good sign.
Or a nurse." Or I'm going, "Oh, this is not good." And Debbie's going, "We're going to turn around and go back to Atlanta, aren't we?"
Oh, boy, no.
We're going to go back. No. Hello, everyone. Welcome to the Talking Real Money program, because we talk about real money on the Talking Real Money program. I'm Don McDonald. Tom Cock is over there, not in the laundry room, but he does have the Model Aircraft Museum in its
coming back to life.
It's sort of in its
planes.
Doge form.
Yeah, it's stripped down, but it's still functioning.
The costs have been cut.
Exactly.
It's a smaller museum than
Lighting's not as good, and the employees rarely show up, but it's doing better.
Today, we want to travel back in time a little bit. Well, to like a month ago.
Not too far.
About a month ago. We went through something that was in hindsight, was pretty darn unique. We went through a very rapid decline in both stocks and bonds in the U.S. It was pretty dramatic. It almost got to the wonderful world of a bear market. And then just about when you figured out what was going on, you thought, this is it. The end of the world has come. I need to get out of stocks completely. They went the other way.
Yeah, and a couple of things here. April 8th, circled that day on your calendar. That was the bottom, apparently, at least for this little kerfuffle.
Yeah,
or what do they call it here?
I did not predict that would be the bottom. I messed up.
A temper tantrum. That's what this article called.
I love that line.
Yeah, that's a great line. Yeah, that's 1/8. The other 8 is $8 trillion. That's $8 trillion of rebound, which is kind of a lot of money. I mean, it is to me. I don't know about you.
Well, if I had $8 trillion, I think I'd think it was a lot. Yeah.
You would have flown private back and forth to New York too, probably.
Yeah, yeah. By the way, just full disclosure, Tom has destroyed me. Now the last 2 flights I've taken, I've flown up front. I went, you know what? Life's too short. I'm not sitting in the back of the dang bus.
So now I'm not the only 3-star, 4-star guy in the place.
I stayed in a Marriott Town Place Suites as opposed to you staying at the Ritz-Carlton.
Wherever.
If we're doing
similar.
Marriott properties.
Yeah, right, exactly. But here's the thing. It's fascinating about this. Number one, for those people that got out of the market, and there were those, because you can watch money come in and watch money go out. Fascinating. Guess what's been happening?
Is that on the 24-hour money channel? You just watch money?
There's the money flowing.
Money.
It's a
kind
fascinating
of like the dog
thing, though,
channel.
because people rushed out, and they didn't buy bonds either, by the way, because the bond market was very screwy for this last 5 weeks due to the tariffs, and we'll talk later about the other situations that have come along. But right now, people are just so gung-ho. The fear and greed index that CNN does, It was fear. It was down to 3 on a scale of 100 back in April. 3. That's like 1, 2, 3 out
really
of 100.
Fearful? That means scared.
That's extremely fearful. And now it's all the way back up in greed territory. It's just. I'd make a joke about teenagers or something.
No, let's
here, but
not.
I'm not supposed to do
really.
that. So,
your best bet is no jokes today.
Okay, just taking a day off from the
joke-free episode.
Joke-free. So, and guess what places a lot of this rally came from? Apple, Amazon, tech, etc. But a lot of other places, consumer. We'll keep talking about this.
Not
what
Tesla, though. I had a Lyft driver who told me, don't ever buy a Tesla. He was from Nepal. He hated Teslas. Don't buy Teslas. 855-935-TALK, our number.
Tom and Don are talking real money.
Hi, Don McDonald here. So, what's your plan for retirement? No, really. What's the actual plan? Because hoping them?
Yeah, you guys sound great.
Stockpiling random investments and praying your gut instincts are smarter than Wall Street is not a plan. It's a guess. And when the market gets bumpy, and it always does, guessing leads to second guessing. And second guessing leads to panicking. That's why you need more than a portfolio. You need a purpose, a strategy, a real financial plan built just for you by a 100% fiduciary advisor who's legally obligated to act in your best interest. Imagine that. Start your plan today with a free, no-pressure meeting at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because your future deserves more than crossed fingers and wishful thinking. By the way, no sales pitch, no obligation, just smart help for real people who want to stop guessing and start planning. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more detail.
Your guides to a really great financial future. Tom and Don are talking real money.
You're really trending, man. I got to say, I just looking at all these comments coming in. Just what I just said, you're trending. Somebody wrote in and said, the new Don McDonald podcast, planes, trains, and cryptocurrency. Why to avoid them all? That's good. And then they said,
I do not want to travel anymore.
If that doesn't work, then it suggested why towing an Airstream trailer behind a Nissan Armada is the only way to travel.
Dang right.
You're really going.
I'm telling you, that's the only way to fly, not flying.
Welcome home. Good to have you.
Oh my gosh! One of the flight attendants on one of the flights the other day, great flight attendant. He was coming from St. Louis. He said they had to ground all the planes for hours to inspect them for hail damage.
Wow. Yeah. Well, I guess I'd rather have that. Rather be a little late to do that. Than,
yeah,
that makes sense. So
holes in planes generally bad.
Yeah, right.
Generally. I mean, your dad knew about that.
Yes,
he had holes actually shot into his.
He had
plane.
some holes that were shot into the plane that he was in. Yes, so
855-935-TALK. That is a really important phone number because that's the only way you're going to be able to sit and have a conversation with us about your money stuff, which we know is important because, well, you know the song. I think it's from Cabaret.
Money, 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 money.
It makes no. That's not from Cabaret. It's money makes the world
Life
go round.
is a cabaret.
Money makes the world.
Oh, I love that song. Joel Gray, fantastic.
Yeah, you know, really we went to a total aside.
That's going to surprise everybody. Okay.
When we were in New York for my daughter's graduation, we went to a club called Marie's Crisis Cafe. Absolute dump, but so much fun because they were singing Broadway songs and they were singing Cabaret and all this stuff.
You guys know them all too. Tori would know them all too.
Tori knows them all.
Yeah.
I mean, when they started singing songs from Wicked, she was in full-throated Broadway diva mode. It was
love it.
It was fun.
Love it.
It was fun. It was a fun graduation. We had a good time.
You want to hear more
the
about
flight back?
Yeah, sorry about
that.
Well,
you
want to hear more about the good news?
How it went way up and then it went way down and then it went way up again.
And everybody that does these things moved in, moved out, and missed $8 trillion of gains, which is just sad. It's shocking. But then the other part of all this is around the economy. Now, as this was going on, more and more people, as you may know, were saying we're going to go into a recession. The chances of that, I find this fascinating. Now less than 50%. Now, It was more than 60% in April. So apparently so much good news has come out in the last 5 weeks that Goldman Sachs among them that had a 45% chance of a recession now says, oh no, it's only 35%. Recession chances on the prediction platform Polymarket have plunged from 66% to 39%. Don't you feel better having known that there's only a 39% chance now? We're looking way better.
But my question is, how do they even arrive at these numbers?
I know, because here's the other side of that somehow has now been forgotten or pushed away. The effective tariff rate right now in the United States is 17.8%. That's the highest since 1934. You know, it's hard to find a lot of people that remember that. Yeah, good old Smoot-Hawley.
Smoot-Hawley.
The wonderful duo from the U.S. Senate.
At Christmas, we don't want anyone smooting your holly.
God, I don't even think you can legally say that on this show.
Smoot the holly?
So what do we take away from all this?
Smoot and the holly.
This is actually important.
What?
It really is. I knew you'd be a little crazy today since you're working on 4 hours of sleep or whatever.
Until 2:30 this morning. All right, go ahead.
Yeah, I wouldn't do well with that.
All
right.
What are you smooting, Mr. Hawley?
A couple of things, because you got to know this. We've mentioned it prior, right? But I still hear it.
A lot of things.
I just heard it in a meeting yesterday. Actually, twice yesterday. Once from a local public official, and then once in a meeting with a prospect.
What, were the police there to see you? A public official? Is that a euphemism for the cops came by?
Actually, the truth of that is I was getting my hair cut, and the local mayor was getting his haircut right next to that.
Oh.
And he was telling me, he was
Floyd's
telling me about
barbershop?
Well, close. He was telling me about a real estate deal he's doing with his son. He said, but we're just waiting a few months for interest rates to come down.
Oh.
And I said, well, His Honor, I don't know that we can say that. Certainly can't guarantee it.
I don't mean to correct your grammar, but it's Your Honor, not His Honor. It'd be His Honor if you
no wonder he stormed out of the place.
It would be His Honor if you were referring to him about him to someone else. His Honor, the mayor, not. So you offended him by calling. Hey, His
probably
Honor.
Among other things, I'm sure that I
did.
Said.
You call him on his predicting?
I just said that's not a reason to do anything. The same as we'd tell you here. If you're going to do a real estate deal, go do a real estate deal. Get it done. Who knows what interest rates will be in 6 months, 6 years? Nobody knows. And that gets back to this whole kerfuffle, this temper tantrum that so many people reacted to. If you have a properly built portfolio that's about you and not the economy, this was entertainment, I guess, at some level, but it had nothing to do with your finances. It shouldn't, right? I mean, but we see it all the time.
But psychologically, it feels
that was number two.
It feels like it had something to do. I know that I have someone downstairs who's probably listening to the show right now who was ready to sell it all.
Yeah. And by the way, I went because I read this piece last night. I got up today. Guess what I did today? I checked my 401k.
Did you sell it all?
Because I was curious.
Oh,
I was curious. I was serious. How did it do? Not a lot of difference between now and a couple of months ago.
I can't even remember how to log into my 401k.
You don't even know where it is, probably. So, but this is actually because you referred to Debbie. If you are one of these people that this bothered, then you should write it down and remember it and discover what your actual risk tolerance is, because maybe you're taking too much risk then. That could be, right? People,
but
they do that. They don't know it.
No. See, that's not right. They're taking too much risk for their risk tolerance, maybe, but the reality is the vast majority of people who invest believe they can have the best of both worlds. That they can find a way to be out before it goes bad and to get back in before the going gets good.
Yeah, but you've heard this from everybody that you cannot do that.
But hope springs eternal.
I guess. All right. Which brings me to my third and final and perhaps most important point, and you can look this up.
Oh, good.
Tune out the noise.
Oh, are you talking about the video?
Well, yeah, because last time I looked, I had like 8 million views. You could do this free at YouTube. Okay, want an aside? I was out with my grandsons last night, and they wanted the local establishment to put this YouTube show up that they watch, which I've forgotten the name of now. I was going, you know who else is on YouTube? And they're like, no. I go, me. No, you're not, Grandpa. Okay. So I pulled it up and showed it to them. They're like, whoa, you're on YouTube?
You're on YouTube, Grandpa.
Now I'm
Actually,
somebody.
Tune Out the Noise is up at 2 different places.
Oh, I thought it was
and
just
so
YouTube.
one of them has on YouTube. One place has 8.5 million views. The other has 2.1 million views.
So they're over 10 million
views.
Watch and I'm only saying the film because it's a good film, but I'm also saying just in a general sense, you're going to be happier if you do tune out the noise about all this because it won't make you crazy.
And
I guess the other one would don't be like Don. You should at least know how to log into your 401k, but don't check it often.
I can't remember what the company is that manages our 401k. That's what I always forget.
That's bad, man.
Let's see how many views Tom got on some of his videos. Let's see. No, not 8 million, not 2 million.
3 million?
418,000. Period.
Oh,
that's it.
Tom and Don are talking real money.
The spirit of innovation is deeply ingrained in America, and Google is helping Americans innovate in ways both big and small. The Air Force Research Laboratory is partnering with Google Cloud using AI to accelerate defense research for air, space, and cyberspace forces. This is a new era of American innovation. Find out more at g.co/American innovation.
For your real life and real future, Tom and Don are talking real money.
That traffic break is always so quick. Just speeds right by. Not a lot of commercials or anything. Hey there, welcome back to Talking Real Money. Don McDonald here in Florida. Yes, I made it. Tom Cock there in Washington. He didn't go anywhere yet, but he will soon.
Taking a break from my vacations to do the show. So there you go.
Back from vacation. And he is out of the laundry room, I think, permanently now. So we all rejoice in that because that thump, 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 thump of his tennis shoes in the dryer.
It's the first thing that comes up in most meetings. And I appreciate you asking, by the way.
Know.
So
we love that stuff.
Really.
855-935-TALK is the magical way. Okay, it's old tech that you can use that device that makes telephone calls. Did you know that in addition to all the things you do with it, it also makes telephone calls?
Remember when you just had a phone that just made phone calls and wasn't looking up sports scores and checking your Insta account and all those kind of things?
Or with Chat GPT and all on it, and acting as your personal psychic, psychologist, and researcher. You can call us, 855-935-TALK. Just use your phone. Call on Saturdays, okay? Saturdays. If you call other times, you're not going to get us, but call Saturdays. It's good. You can also, though, go to TalkingRealMoney.com and send your questions in. And Tom gets those on a piece of paper and then guards them zealously, forcing me to answer them off the cuff.
Well, because this one's about you, too. It says, gentlemen, I really don't understand why you're against Fidelity's fixed no-load annuity. Don is the worst on this topic, but he slams other advisors anyway, which is wrong in my mind. I have some Fidelity deferred fixed income annuities in my Fidelity account that compound daily and are doing well for fixed income option. I spread it out to only the highest rated insurance companies as a hedge and don't put all my eggs in one basket. I average 5% with a combo of New York Life Guardian and USAA. Just thought I would bring this up.
I'm glad you brought it up because they do what they say they do, but they're doing it. I don't care how you feel about it. The reality is that on a pure risk comparison basis, pure risk of loss comparison basis, your annuity is more risky than a treasury bill or treasury note or certificate of deposit at an FDIC insured bank. It is. It must be. Now, is it
you're saying that because it's a contract with an insurance company?
Contract between you and an insurance company.
Got it.
Your contract is as good as the company with whom you have the contract.
The aforementioned New York Life Guardian, etc.
I'm not saying they're not going to pay. Just talking about on a pure risk-reward basis. Anytime you're getting a slightly larger yield on something, you are sacrificing something. It must be that way. Otherwise, no one would buy the other securities. I am not a stupid person. I can be annoying, yes, but I am not a stupid person. And I have my fixed income money. I have some of it in BND because that's the more aggressive one that has a little bit of fluctuation in the value. And then I have a bunch in a ladder of FDIC insured CDs going out 5 years because those dollars are my unassailable dollars because I will never sell those CDs. If I needed it in an emergency, the 1 year that rolls over, I'll just use it. Otherwise, I'm getting close to 5% with zero risk and zero volatility because I'm not going to sell it.
Liquidity, right? Although I guess it would cost you a little bit if you took it out early on the CDs, right?
Yeah, I'm going to lose a few months of interest, but I'm not going to lose any principal. Right. And now, again, the Fidelity annuities, though, on a fixed annuity from Fidelity, I don't believe
it says no load.
I don't believe they charge a surrender charge. So, but that's where we also have to be really, really careful in how we speak. Because so many insurance products are sold with high commissions. They have the loads.
Yeah, thank you. Because this is the part that I think the reason that we're fairly strident against these type of products is the majority of them are not in your best interest. They're great for the person selling them. And so we have a tendency to say, just stay away from that. And because that's the reason you end up paying big commissions, lack of liquidity, all those things we mentioned before. So that's why.
And there's another thing I have to add to this. And that is the fact that there are so many different types of annuities. There are the fixed annuities, immediate annuities, variable annuities, indexed annuities. And they all are made to be confusing. So we have to be very cautious when we say, yeah, an annuity might work. It might work.
Tom and Don are talking real money.
McCrispy strips are now at McDonald's. I hope you're ready for the most dippable chicken in McDonald's history. Dip it in all the sauces. Dip it in that hot sauce in your bag. Dip it in your McFlurry. Your dip is your business. McCrispy strips at McDonald's.
Reality radio for a really great future. We're talking real money.
I did do some checking during the break. Just wanted to make sure. Fidelity's annuities do not have surrender charges because they are no load. But again, annuities are annuities. They're complicated. I don't like them in most cases, but there are circumstances in which they make sense. By the way, no, I take that back. That's only their personal retirement annuity. They do have some annuities they sell with a surrender charge. So again, it can, even with Fidelity, it can end up being confusing.
I think the product itself is confusing, and I think that works to your disadvantage, no question.
855-935-8255 is a number I repeat often. The reason I repeat it often is because none of you have called.
Because you're the only one who knows it.
If you called more,
I always forget it.
How is it that you...
I don't know. I should know it.
We've been doing this show...
Forever.
It was interesting. I was looking at a list online of the... I think it was on Reddit or something, of the top... This person's list of their favorite money podcasts.
Uh-huh.
And we were on it. There were like 10 or 12 of them. Yeah. And it was like... This one has 89 episodes. This one has 120 episodes. This one has 400 episodes, Talking Real Money. Over 1,200 episodes whenever they put that up. Now we're at 2,000 episodes.
We
have more
2,000?
episodes up than most people. Yeah.
2,000. Yeah, well, and if you go back to our sound investing days,
please,
where we were
take
picked as the best money podcast according to Money Magazine in 2008. Yeah, so good time to be good.
Anyway, you can call us at 855-935-TALK if you want to ask a question, have a conversation about money. Otherwise, you can send questions in, but we can't have a conversation. It's just you asking a question, and then we have to make the best of it. Sometimes with a lack of information, we fill in the blanks. So you can call them in, or you at 855-935-TALK, or you can send them in at talkingrealmoney.com using the Contact Us button there at the top of the screen. You can type them or speak them, and this is a typed one that Tom gets and then shares with me later.
I'm picked on you a little bit on the last one, so now you're going to get the good side.
Me? Oh.
That wouldn't surprise anybody here, but this comes from Bruce in Seattle, and he says, Hi, Don. I want to say thank you for changing my financial life. Now, one thing Bruce doesn't say is whether he changed it to the positive. No, kidding. I'm kidding. He says, I moved to Seattle in 1989, divorced, with no contacts and $500 in my pocket. I eventually found a job to barely support myself. During that time, I would listen to you on the radio during dinner. I initially didn't know what a mutual fund was, but financially educated myself thanks to you. I gradually started to invest in no-load funds, and now fast forward, I'm successfully retired. In closing, you made a huge difference in my life. I always wanted to thank you for your financial education. I wish you well.
Wow, if he was listening during dinner, that must have been back to the days of KEZX.
Yeah, 1988, 89, way back
when
in the
I
day.
did the show at 9 p.m. Eastern.
That's right, you did.
So it was during dinner on the West Coast.
It was, yeah.
I forgot about that. Anyway, fascinating. Well, thank you very much for the nice comments.
But okay.
I have to respond more?
No, I'm going to respond more. Not to what he said, because that is a very kind sentiment, and I think it's true. This aspect of no-load mutual funds. Now, you can still buy mutual funds today where you pay a commission, right?
Oh, heck yeah. Lots of them.
Yeah, but this is when I read this, I thought, wow, think that through a little bit. In today's world, why would you ever pay a commission for a mutual fund? Seriously.
The only reason you'd pay one is if the person with whom you are working is a commissioned broker acting as if they're doing something that's in your best interest, but they're not. In other words, these days, if you're paying a commission to get into a mutual fund, you're being advised by someone who is not a real advisor. They're a salesperson. It's a fact, all of you who are in the brokerage business, you're salespeople.
And the biggest purveyor of loaded commission mutual funds is still American Funds, right?
American Funds, the capital group out of Los Angeles, yeah.
Yeah. Now, but I was reading recently that they're looking at exchange-traded funds. Wouldn't that blow up their business model? Because if they did that, then they would have...
No. That wouldn't blow up their business model. Now, that would mess up... Well, it really wouldn't. What they're looking for is to have the best of both worlds. Because what they'll do is they'll create actively managed ETFs that will still have because they only make the expense ratio, Tom. They don't get any of the commission. That goes entirely to the sales force. So they'll have an expense ratio that's slightly lower than their mutual funds, but still, I guarantee you, more than enough to make them a profit. 855-935-TALK.
Tom and Don are talking real money.
Hi, Don McDonald here. So, what's your plan for retirement? No, really. What's the actual plan? Because hoping the market goes up, stockpiling random investments, and praying your gut instincts are smarter than Wall Street is not a plan. It's a guess. And when the market gets bumpy, and it always does, guessing leads to second guessing. And second guessing leads to panicking. That's why you need more than a portfolio. You need a purpose, a strategy, a real financial plan built just for you by a 100% fiduciary advisor who's legally obligated to act in your best interest. Imagine that. Start your plan today with a free, no-pressure meeting at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because your future deserves more than crossed fingers and wishful thinking. By the way, no sales pitch, no obligation, just smart help for real people who want to stop guessing and start planning. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
Well, welcome to the weekend. At least that's when we do our show on the weekend. We do it live on Northwest News Radio in the Seattle metro area. But we also turn it into a podcast the next week so that everybody around the world can listen. And boy, people around the world do listen. 855-935-TALK is the number to call on Saturdays from noon to 2 Pacific time, 3 to 5 Eastern. By the way, Tom, I was way off. I went and looked. We have 1,648 episodes up now. 1,648.
So we can just round it and say 1,700 be okay, right?
Actually, we have to round down to 16.
You're such a compliance
You could round up to 1,650.
Okay.
Can't say 17.
That's kind of a hard number. Okay. 1,650 it is. Going once, going twice.
Well,
still a lot.
With this show, that will make 1,650.
That's a good point.
So
we're
this is 1,649. The next hour will be 1,650. there we go.
So if you want to be part of history hitting the 1650 mark, you call right now. I mean, that's big.
855.
Remember when they had the thing at McDonald's over blank million served? Now you could be blank
when
1650
I was a kid,
served.
it was still in the seven figures.
God. Do they have that up anymore? I don't go to McDonald's. As you
I
know,
think they lost count.
It's just so many burgers.
There were
that's
so
it.
many. The number got too big, and really computers weren't as good as they are now, so they couldn't keep track.
That's true. All right.
You know, they ran
so
out
do
of
you want
fingers.
another question?
They ran out of fingers and toes of the entire staff.
The Hamburglar couldn't figure it out from there?
Well, the Hamburglar only has like 3 toes, so it threw the count off. 855.
You don't want to ask where the other ones ended up. God. All right.
When the show degenerates.
Yeah, well, and it's degenerating. So call
Only
and
because
save us.
you're a
Tim.
degenerate.
Tim writes us from beautiful Madison, Wisconsin, where a year ago we were just getting ready to head there. We had a wonderful time.
Hey, wait,
there.
is Tim also known as the Enchanter?
Yeah. That's, by the way, that is the 50th anniversaries right now.
Of Monty Python and the Holy Grail?
Of the Holy Grail. The Grail. Yeah, 50
movie.
years. I got to watch that.
One of the greatest movies of all time.
I still love that.
So
and I know
funny.
too many of the lines. It's just bad that I do. All right. Actual question here. I'm inheriting $250,000, wondering whether I should pay off a large chunk of my mortgage or invest in these funds. My wife and I are 35 years old, have $360,000 in assets invested for retirement. We're both government employees and expect to have a state pension and Social Security in addition to what we have saved. We bought our house in 2024, so our mortgage rate is 6.6%. Outstanding loan balance is $440. If you would invest the funds, would you try to get into a tax shelter plan or put the balance in a taxable brokerage account? Any advice you have for approaching this decision? $250.
Yeah.
Pay off the mortgage or invest it for the longer haul here.
The 6+% is a very attractive, safe return, in essence. I mean, if you put it into the house,
6.6, yeah,
you will essentially be getting a 6.6% return on your money because you're not paying 6.6. However, there are a couple of little buzzing, nasty flies in that ointment. One of them is the extraordinary, sometimes ridiculous, illiquidity of houses in certain markets.
This is a part that people have a tendency to overlook.
It's not like...
Speaking of that, is there a condo you'd like to buy?
Oh, shut up with your condo.
Okay,
it doesn't spit money out when you need it. It's hard. You got to borrow it, and if you borrow against it on a short-term basis, well, then you're going to pay a whole lot more than 6.6.
Yeah. No, that's a very good point. And so here's the other part of that, of being 35 with the cash. The expectation is, 6.6% growth. And as you said, you could sort of count on that because you're paying down the mortgage. Still be less than I would expect at 35 moving forward because you should make more than that over time.
You should, but we can't.
If you're aggressive.
We can't with any.
No, we can't.
We can't at
Fair
all
enough.
say you're going to because it may be that the future is nothing like the past. It could be that the next 30 years of your life, we're in a stock market that barely gets out of its own way, where GDP growth is slow and the stocks grow at 4 or 5% a year, and you're going to regret it. But that's life. Life is like one constant series of regrets.
Like
Oops,
getting
I did
on a
that
plane.
wrong. Yeah, right.
Okay, but here's another thing to consider about your retirement. You say you're both government employees, and I believe you're saying you're going to have 2 state pensions and 2 Social Security benefits.
Yeah.
That's a lot of regular income.
Yeah.
So there's no right or wrong answer here.
Exactly.
That's the problem.
It comes down to financially, it's based on the past. It would have been better for you to have invested that $250,000 30 years ago in a diversified portfolio of stocks. You would have had a lot more money. You could have paid off the mortgage plus bought another house, basically.
But I don't know why this has to be binary.
Yeah, it's binary. No, it's binary.
No, it has to be 250 here or there?
Yeah.
You can't do part of it? You can't split it?
Because it's not.
What? No. I'm going to argue with you there. I think you could take some of it and pay down the mortgage a bit.
Again,
and then invest the other part.
Here's the other part I was going to throw in, though. At 35 years old, think back.
Can't remember that far back. Let's see. I got to add that up. Where was I?
I know where you were. How many houses have you been in since then?
Wow.
At least two. I think it's
first
two.
I got to figure
It's
out what
two.
year that was.
It's
yeah,
two.
Okay.
It's two.
Oh, it's more than two, but okay.
Okay. But you've been in three houses over that
1993.
time. Yeah, you've been in three
So
houses
one,
over that time.
2, 3. It's 4, actually.
Oh, 4.
You're halfway there.
Did I miss one in there?
I think
thought
there was
I
a
knew
period
where
of
you
time
lived.
where I tried to ignore you and you didn't know where I was living.
Oh,
so.
he hid from me. And that's the other part of it is that is this your forever home where you just kind of,
it's a good point,
there's
by
a
the way.
warm, fuzzy feeling to owning it when you get to retirement. If this is the place you're going to settle, then
At
I could make
35,
the
you
argument.
don't know.
Right,
You don't know
exactly.
that.
You
No
don't
way.
know,
No
which
way.
is why I would put nothing toward the mortgage.
Nothing. Wow.
Nothing.
Strong. Okay.
Nothing, because it doesn't lower your payments.
Okay, but so we'll go with that. We'll say we'll go with nothing.
All it does is shorten your term. It doesn't,
Got it? Yep. Okay. It doesn't reduce the interest rate, et cetera, et cetera. So if you're going to invest it, here's something to consider. Number one, because you asked, should it be in tax sheltered or just in a taxable account?
Both.
I think you should set aside the money to do a Roth for you and your wife this year, next year, maybe even 3 years. That should be that should be set, ready to go. That'd be one. And that's $7,000 each, right? Each year.
Right.
So
and what
there's
you could do is
14 plus-
put it all in the brokerage account and then draw it from the brokerage
point.
account to pay
Yeah.
to make the contributions to the Roth. If you're eligible for Roth, you don't have too much income to use.
Good point. And I forget where it's all changed now. And now, by the way, who knows after the big beautiful tax bill that I guess may or may not be passing soon either.
Beautiful. It's not passing soon.
No, it doesn't sound
Let's
like it.
see. Married filers. Your modified adjusted
170.
gross 236.
236. That's where it ends.
Single.
Anything above
yeah,
236,
nothing,
can't do it. Yeah.
Oh no, full amount. Full amount up to 236, and then it starts falling.
Oh, okay. So it's
236 to 246 that you get the reduction.
Okay. So if you make more than that, you can't do the Roth.
Right.
That's that. But if you can do the Roth, then yes, I would at least do that from this year, next year, probably the next year. I have that money. It's
And
just
then the
put it
rest
in the
would be in
brokerage
ETFs.
account. Yeah.
At 35, if your risk tolerance is high, I'm not even going to talk about risk need because you're too young to even know what your need is for risk. You're not going to know for several years, but you will know your tolerance. If your tolerance is high, nicely globally diversified portfolio like an AVGE or something, sit it there in your nice taxable account. It won't have much in the way of taxes along the way. You still get some tax deferral if you don't sell it, and there you go. Thanks for the question. If you want to call us with one, our number is 855-935-TALK, 855-935-8255.
Tom and Don are talking real money.
This episode is brought to you by Amazon Business. How can you free up your team from time-consuming office tasks? Amazon Business empowers leaders to not only streamline purchasing, but better support their teams so they can focus on strategy and growth. Free up your teams and focus on your future. Learn more about the technology, insights, and support available at amazonbusiness.com.
For your real life and real future, Tom and Don are talking real money.
Well, it's distinctly possible you were trying to call because I just tried to call during the break and it didn't answer. You guys
So
answering?
it's still ringing at the place you're at in New York or something, or it's halfway back to Atlanta, or Atlanta to Orlando,
to New York.
or?
I got it forwarded to the radio station, but
All right, so
there was
all right. So we'll
no answer.
try for
So
better here
we're gonna-
soon. So
We're going to
give us a call.
fixing that. 855-935-8255.
I'm pretty sure we know the internet still works.
No, you do for a fact.
Well, it's working here.
Well, it's working
if it's
here,
working
but
here,
that
it's
doesn't mean
working,
it's working
anywhere.
everywhere.
Exactly.
It's up
So-
to you, New York, New York.
Great
And
song.
if it's working there.
so
by the way,
if
they
you'd
sang
like
that
help-
at the end of my daughter's graduation. The singers from the school
Well,
at
it was
NYU.
New York University, right?
That's
Should
New
be. Why not?
York University.
How much do they pay Sinatra's estate for that little?
I think it's part of just
Reprise.
the general royalties that Radio City probably covers.
Okay.
Think about it.
Yeah.
You
Good
can
spot.
kind of go into Radio City and perform music. It's called a music hall. Radio City.
Get
Music
away with
Hall.
it.
And I think
love
they
it.
probably pay ASCAP and BMI fees to cover that. So even
All right.
you could burst into song in Radio City
Not really, though, because they would throw me out.
They would only arrest you.
Off tune, not having the lyrics right. Other than that, I'd be perfect. Okay, but what I was trying to say about so if you tried to call us, call again, number one. But number two, the internet still works. So if you want some additional help or you want to ask a question, typing it, you can just go to the website.
Or you can speak it at the website.
Or you can speak it. Or you can ask for help there. We have a whole website that's just set up for you, and it'll really surprise you to know that you type in talkingrealmoney.com, because that's where all that information is.
Right, talkingrealmoney.com.
That didn't surprise you much.
Why would it surprise me?
I don't know. You're a little slower than you normally would be.
No. I'm checking to make sure I'm forwarding.
Oh, okay. You're actually doing
call
something
properly.
Your eyes were glazed over. You look like you deserve a nap after this. Okay, so talkingrealmoney.com.
Okay.
And here's the good news. Yeah. Here's the good news. The really good news. This is no joke. And we do this, and I've been doing it almost every day because we've got a new guy. He's really been making me hustle. We sit down with people for free, review their portfolio, answer their financial questions. We just did this yesterday with a wonderful couple who came to this country 30 years ago and have been tremendously successful. It's great to see. Where we reviewed their portfolio and said, you really should own more of this, this, and this. And if you're going to retire in blank, here are the things you really need to think about. It was great. It was a great conversation. We do that free. All you got to do is go to talkingrealmoney.com, click on Meet an Advisor, and we do the full Monty, if you will, for absolutely nothing.
We don't really do the full Monty. We don't do the full
Can I say that?
Monty.
I don't.
No, you can't say that. And okay. You can't even imply that. Given our age, you can imply. Well, one, didn't you take that?
Speaking of being thrown out of places.
Didn't you take that sensitivity course at work thing?
I don't think that's what it was called, actually.
The full Monty? Was it called the full Monty?
I don't think it was called a sensitivity course because, again, I would have failed that very quickly, as you know.
It's highly insensitive. Anyway, go to talkingrealmoney.com and you can do all kinds of stuff there. Just play around. No, I can't even say that either. Just
back to sensitivity training.
Don't play around. Don't play around at talkingrealmoney.com. Be very serious when you get there, and send all your stuff in there, and just I don't know what I'm saying.
So loquacious.
The opinions and views expressed on this podcast were current on the date recorded.
Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone.
This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction.
Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor.
Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services.
Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.